kitchen-sinking quarter for ICICI Bank this quarter. So you can't really write it off as a terrible quarter because there is that one-off provisioning of 3,600 crores, this special provisioning of 3,600 crores which they've recorded this time round, which in fact resulted in the profit coming in at 700 crores. But remember that there was a deferred tax element of around 2,100 crores this quarter as well. So that really supported the bottom line. If it wasn't for that, then it would have been a net loss that the company would have recorded. But overall, yes, all eyes were on asset quality. But if you look at the asset quality details, barring the worsening that took place in terms of the gross NPL ratios, the slippages for this quarter came in largely in line with what was expected in the previous quarter. So 7,000 crores is what it came in at versus around 6,544 crores in the previous quarter. Now, the management did say that 60% of this, which is around 4,000 crores, was in fact from the AQR, which is the asset quality review by the RBI, and that is now completely done away with in terms of the AQR. They did sell loans worth around 700 crores to asset reconstruction companies. There were recoveries of around 700 crores this quarter as well. Now, in terms of the other parameters, net interest margins did worsen. So 3.37% is what they came in at versus around 3.5% in the previous quarter. So yes, there was a dip in terms of the net interest margins, but the advances held up with a growth of around 16%. What happens in terms of asset quality going forward? Well, as of now, we don't have clarity in terms of what the slippage run rate would be in terms of FY17, which would be post AQR. But the management did say that there is some amount of positivity possibly coming in from sectors such as iron and steel, simply because of the recovery that we've seen in steel prices. But prima facie number, what they delivered, yes, a disappointment, but maybe it's a kitchen sinking quarter and we won't see such shocks in terms of profits as well as special provisioning in coming quarters.
All right, Ekta, thanks.